We have a problem. We're
We have a
disconnected from LinkedIn.
we have a problem with LinkedIn. Okay.
Yeah, we're disconnected from LinkedIn. I'm gonna
Okay.
force live, okay? We're
Force.
gonna go live by other means. Okay,
All right.
stand by. Hello and welcome to Ask Deb About Business. I am Rom Gayoso, co-host. We're broadcasting via Futures Television, the home of the future on television. If you're watching this show on Futures Television, listening to it on Radio Futures, or listening to it as a podcast or as a recorded event on one of the social media platforms, you too can be part of the conversation. Just visit our YouTube channel, that is IMCI Magazine, where we continue to chat about the topic of the day. Or you can also access this information on our website, and that is www.futurestelevision.com. So don't be shy. Today, our topic is financial planning and analysis, best practices for small and medium businesses. COVID 19 threw a curveball at businesses across the globe, leaving finance teams scrambling to analyze their numbers and adjust plans more rapidly than ever before. Pressure from senior executives for regular performance updates took financial planning and analysis specialists out of their comfort zone and highlighted the unsuitability of legacy ways of working. You know the problems. Siloed data and complex, disconnected FP&A tools proved to be ineffective in an increasingly turbulent market and an environment that demanded financial agility. Leaders of finance departments that had previously transformed FP&A were in advantageous positions when the calls hit. The rest navigated the organizations through a stormy sea using sheer determination, but there are still many waves in the aftermath. It will not be plain sailing, especially while traditional FP&A approaches remain entrenched in daily operations. Evolution is required to transform FP&A for the modern marketplace, and finance executives need to lead this transformation for their organizations to survive in the long term. Business owners and leadership can help transform the FP&A function by automating the finance department, using scenario and predictive planning, ensuring enterprise-wide collaboration, and extended planning and analysis. One thing is certain: FP&A is changing, and finance teams must evolve in response. There's a lot to talk about on this topic, but worry no more. Now you have someone to talk to. But first, let me say a few words about the show. Broadcasting live from Butterfield Studio in Chicagoland to the world, I would like to welcome you to Ask Deb About Business. The talk show is broadcast every other Thursday at 11 a.m. Central Time, where I join Deb Beats to discuss a variety of business topics. No matter what your venture is, you certainly have questions. So let me say a few words about Deb before we get started. Deb has a long and distinguished career as a coach, mentor, and through her awesome training programs at SMB Digital Education, she has enabled many entrepreneurs to follow their dreams. And that's exactly what I like about her. It's her ability to deliver practical advice to help you solve real problems. If you have a business question, well, let's ask Deb. Without further ado, let's welcome Deb Beats to the show. Hi Deb, how are you doing today?
Hey, Ron. Good morning. How are you?
Wonderful. How cold is it in Chicago?
It's very, very cold in Chicago, but we're warm and cozy here in our home studio of Butterfield Studios in Vernon Hills, Illinois. And I'd like to thank Jeff Horvath and the Butterfield Studio team for making us look and sound so great and for this beautiful set. So thank you, Jeff. And welcome everyone to the show. Our show focuses on emerging trends, challenges, and opportunities facing small to mid-sized businesses, business owners, business leaders, and business professionals. And we invite subject matter experts on our show, experts on those topics. And my promise to you is that by the end of our time together today, you'll have at least one key takeaway that you can then implement within your own business. So our show is all about practical guidance, practical advice that you can then make actionable for yourself or your business. And today I'm delighted to welcome Carl Seidman to the show. Carl is an expert in financial planning and analysis, and we're going to talk about cash flow, profitability, best practices, and he's going to share his wisdom with us.
Wonderful. So before you get started, let me say a few words about Carl. So Carl Seidman is a trusted business advisor specializing in financial planning and analysis, business strategy, and finance transformation. He advises Fortune 500 corporations and middle market companies, helping establish effective FP&A practices, processes, and teams. At the same time, he supports financial professionals, positioning them for greater control over their careers by helping build their competence and confidence while eliminating time-wasting activities and mistakes. Carl's FP&A development methodologies and curriculums have been implemented by leading organizations as part of their financial leadership development programs for top talent and emerging leaders. More than 13,000 corporate finance professionals globally have attended his training programs, workshops, and seminars. Carl is a certified public accountant and has earned other professional credentials, including the CIRA, CFF, CFE, CGMA, and AM. They are all certified in business valuations. He is also a certified speaking professional. He holds a BA in finance and economics and an AMS in managerial accounting. Well, without further ado, let's welcome Carl to the show. Welcome, Carl. Wonderful.
Thanks so much, Rob.
Good
nice
morning.
To see you, Joe.
Good morning and welcome. So happy to have you with us today to share your expertise on financial planning and analysis. And one of the things I love to do when our guests join us is, talk a little bit about themselves and share their story with our audience, because there are many business owners out there, business professionals, and we've got, I think, 7 million new entrepreneurs over the last 2 years, people that have hung out their shingle and joined the ranks of business ownership. And so our audience is very interested in hearing about your story, how you started. I know you came from the big accounting world, the big four. Here you are, as the founder of Seidman Financial. Take us back to the beginning and share a little bit about yourself and how you got here, and tell us a little bit about your business.
Sure. Well, thanks for having me. And at the very beginning of my career, like so many, I have a formal education in accounting and finance and economics, and I decided that early on in my career I wanted to do something that was going to be robust and challenging and force me onto a learning curve that was going to be very accelerated and steep. And so what I ended up doing was I joined one of the big four accounting firms, specifically PwC. But what I didn't want to do is I didn't want to do auditing and I didn't want to do tax. I wanted to go into something that was a lot more interesting and more dynamic, at least in my mind. And what that looked like to me was going into a consulting practice. So I was joining up with a group called Dispute Analysis and Investigations. So disputes being some kind of a failure, some kind of a litigation, forensic accounting being fraud or money laundering. So this is a very crisis-driven, intense environment. When I first joined that, it was a focus on financial modeling, it was a focus on valuation, it was a focus on report writing and presentations. So I was able to get a really interesting, deep background early in my career when I was really quite young. Several years later, we got into the recession of 2007, 2008, And business started to get a little bit slow and not as challenging as I wanted. And so I took a look out into the environment. I said, well, what's going to be busy during a recession? What's going to be busy during a downturn? Right. So I ended up going into distressed business consulting, working with companies that were failing in liquidity, having a pathway towards bankruptcy, companies where layoffs were on the horizon or had already happened. And so I ended up going into that background, which played upon the original background of PwC of crisis management and modeling, and valuation, and consulting. And then ultimately, after a number of years doing that, I had said, well, going and taking a look at these clients, these are all a lot of companies that are struggling. They don't necessarily need a big firm to be able to do this, and particularly in small and mid-sized companies, they don't have access to those big firms. And they say, well, we need those same types of services. We need somebody who's a little bit more affordable or economical, but has that robust background, and that created a whole new career for me.
Wow. So you have a lot of experience working certainly with big corporations, as well as working with small to mid-sized businesses, right? So your background includes kind of that, that breadth of experience, I should say that. My background is somewhat similar, is that I come from kind of the big corporate environment as well. Now I'm working in the SMB space. What we find is that there are many small businesses that need those types of services that don't have the deep pockets that obviously a large corporation has.
Right.
And so many of them are looking for access to resources. And so, it's kind of interesting that, you're a service provider that is really, you've got a background in helping people manage through challenging times, right? And we live in challenging times. We've got a lot of businesses with what happened over the last couple of years. A lot of businesses have been struggling, and so it seems to me like you're well positioned to help a lot of those SMB organizations, find ways to navigate through, maybe ways to manage, their cash more effectively, become more profitable, innovate, whatever that happens to look like, to find a way forward. And so I wanted to also just let our audience know that one of the reason why you're here and how I found you, it was kind of interesting. We had a show a couple of weeks ago about social media, and our guest was Vanessa Cabrera, and Vanessa talked about social media strategy and what were some best practices, and that was our show a couple of weeks ago. And one of the things that Vanessa advocated for was a recipe for social media success. And she said that there's this recipe, it's an equation that says that you have to show your confidence and capabilities on social media. You have to be consistent with your posting on social media. And if you do those two things well, that will convert into opportunities. And it's kind of interesting how Carl is here today is because of his expertise in presenting himself, his capabilities, his brand image through social media. And so I started following Carl and on LinkedIn and read a lot of his blogs and his posts, and very quickly gathered that this was someone who was very knowledgeable in the FP&A space. And I thought, okay, FP&A is not something that I'm an expert in, but I am a business owner. I have, growth plans for my business. We're all, being a business owner is not for the faint of heart. So, who is this person, and how can I learn from him? How can I help to leverage his capabilities? And so one of the things that Carl also did very well was the form of short form video. So you go on LinkedIn frequently, very consistent in your posting, and you do a lot of short-term video. So it's enough information, to show your expertise and to provide value, without over-engineering it, and very short video. And so that is the best practice for those of you that are watching and listening today, to go out to LinkedIn and look at Carl's profile. You'll see exactly what I mean. And so pay attention to he's really exhibiting a best practice here as to how to present yourself, your capabilities, your value to an unknown, a new audience potentially, and have that convert into leads or opportunities, in this case, to come on a talk show and talk about those capabilities. So I just wanted to, offer that up to our audience. And of course, because we're working with small to mid-sized businesses, a lot of our viewers and watchers are business owners. As a business owner, one of the number one focus of ours is managing cash flow. And so, I want to kind of transition a little bit into some of the, the practical topics. We all need to be more mindful of how to drive cash and measure that, and ensure that the financial viability of our organizations. And so you wrote something on LinkedIn, and you talked about day sales outstanding as a key measure to measure cash flow. And it's interesting because in the work that I do strategic planning. I'm working with clients, I'm building their business strategy, their performance, management scorecards. They all have a metric for DSO. But what you wrote in the article was that it's not the people that are doing that analysis. There's an opportunity for improvement when they're utilizing that metric. And you spoke about the importance of measuring accounts receivable and accounts receivable aging. Can you share with us what you find in your work with small business owners? What are they measuring? What could they be doing better? What's the best practice for measuring DSO or measuring accounts receivable and aging?
Sure. Well, for people who are not familiar with the term DSO or days sales outstanding, in the most basic of terms, it is the amount of time or the number of days that it takes you to collect on your receivables. And let's take even a step back. What is a receivable? It is a sale that you execute on credit and your customer is promising to pay you. So for example, if I deliver a service to a company, I invoice them, they're not going to instantaneously pay me as soon as I invoice them. They might take 7 or 14 or 21 or 30 days. Now I have terms that I set with them where I say, okay, if it's a consulting agreement, it is due upon receipt, whereas if it's a training agreement, it's due within 30 days. Now, if I were to say, okay, here is a 30-day DSO with these sorts of companies, that's a service that I have already delivered. Right. If I am paying my payroll or my contractors, that's cash that's coming out of my account that I am physically giving to them. But 30 days go by and I still haven't gotten the cash from my customer, well, that's a problem. So when we take a look at our cash flow, whether it's the number of days that it's taking to collect our receivables or the number of days it's taking us to pay our vendors, that tells us how much our runway is going to be for our cash. So when I take a look at a company and they say, well, we have a DSO or a day sales outstanding of 30 days and they're suffering in liquidity, well, then I say, well, what can we do to speed that up? There was one company that I worked with probably about 1.5 years, 2 years ago, based in Canada, and we talked about a few different ways in which they can manage that more effectively. One was, yes, invoice their customers and get paid 30 days later, but the two other ways was to connect through ACH, or automated clearinghouse, to allow them to not have to physically write a check, but wire it directly into the account. And then the third opportunity was, well, can we set up some of these customers on direct debits, which essentially means on the first of the month, we're going to take the money out of your account and make sure that we're getting paid. So you end up taking a 30-day payment period and getting it down to 1 day. When you have an understanding of what your runway is, what the profile of your customers look like, what their tolerance for payment is, and what your need looks like, well, then you can dictate what those terms need to be in order to cash flow.
Wonderful, wonderful. Another key, area of importance is managing, the balance sheet, right? And in managing your assets, your liabilities, your equity, and I think when things are going well for businesses, and they look at their balance sheet, they go, oh, here's, we're doing well, Rome is not burning, we're comfortable, we're satisfied, and then maybe their attention gets diverted over to, some other initiative or maybe a new opportunity. And so another topic that you posted on was about the caution about complacency with your balance sheet, that it may look good now and you may be comfortable with it, but complacency is not a place you want to be. You want to make sure that there's no bad thing or rude awakening coming over the wall here, where you're going to find yourself, in dire straits. So speak to us about that. In certainly the work I do in planning, we talk about data coming in and managing your business from an internal point of view. I refer to it as the four walls of your business. But there's all this external information that's coming that you should be looking at to make sure that you are ready and able should there be some new challenge that's on the horizon that you need to be aware of. So so tell us about the importance of paying attention externally. Paying attention to what's happening in your industry, maybe within your supply chain, with your customers. If you're in a business that's regulated by the government, your competition. Because those are inputs, those are data sets that need to be reviewed and analyzed on a regular basis so that you can look for ways for potential challenges that are on the horizon so that you can mitigate risk. So how do you work with your clients? What are some of the counsel that you give them to make sure that they're kind of keeping an eye on, that things are looking good and you're comfortable now, but you don't want to be caught unawares? What are some of the counsel you give them?
Sure. So there are a few questions kind of wrapped up into what you just shared. Is at a high level, how do we avoid complacency? How do we avoid just treating our business in a day-to-day or a week-to-week perspective? One of the reasons why the balance sheet is perhaps the least analyzed or least observed of the financial statements is a lot of companies say, well, we don't have a whole lot of control over it. It just is what it is. We know what the P&L or what the income statement is. We can control revenue. We can control costs. We can control profitability. And then they take a look at cash flow and they say, well, we know what cash is coming in and we know what cash is coming out or going out. But the balance sheet, it just is what it is. There's nothing we can do about it, which I completely disagree with. And to your point, Deb, is the balance sheet, in many ways, it's a longer term view of saying, well, it's not just what is our cash, what are our receivables, what do we owe, what's our debt, what's our equity in the coming weeks. It's, well, what might this look like 6, 12, 18, 24 plus months from now? And when you have that longer term vision, and then you take a look at what your balance sheet looks like in that longer term vision, that longer term perspective, then it starts to have a whole lot more meaning. So companies that are looking to say, well, I want to increase my valuation. I want to make sure that I remain solvent. I want to make sure that I have enough cash in the business to be able to embark upon these investments or these projects that I'm taking a look at 12 plus months from now. That's really important to be able to keep that kind of vision as it relates to finance. Taking a look at it more of a macro environment, especially of where we've been over the last several years, but even with the uncertainty that we're in now, going into what the economy looks like, right. Are we going to be recovering? Are we going to go into a darker place? We don't know. So having a longer term perspective and paying attention to what is going on in your industry, what's going on in terms of pricing, what's going on as it relates to interest rates and inflation. Those might not impact you today, many of them are, right. But it's a question of, well, what is this going to mean beyond today? What does this look like 6, 12 plus months from now? And what do I need to plan for today if that manifests or if it becomes what I think it could? Back a couple of years ago when we were in a tremendous amount of uncertainty, as I was speaking with companies and clients who were saying, we just don't know. It's not that we're in a bad position, we just don't know what the future looks like. And I said, in the absence of planning, you're putting yourself in an unnecessary position of vulnerability, right, that you're not going to be able to move and change and make decisions when you need to. But when you put together these longer term plans, whether it's a P&L, balance sheet, cash flow, strategic planning, you start to think about what you can do today to position for more of an uncertain future.
Okay, this is so interesting. Again, planning is so critically important and looking, and it's hard sometimes to forecast, right, what that future is going to look like. But keeping your eye on those data sets, or gathering those data sets and doing it as part of your standard operating procedure, so that you're not surprised, right? I think so that's critically important, is leveraging business intelligence wherever it's coming from, And so one thing I do want to ask you this question, because, we've got many different functional areas of a business, and all of them are, in many cases, working with different data sets, different pieces of information. You've got your marketing team, your sales team. Marketing's out there doing market research, market sizing. They're looking for opportunities, right? They're looking for ways to find new markets for their existing portfolio to generate incremental revenue. They're looking for ways or opportunities to innovate, maybe create, new products, new services. And you've got your operations side looking for ways to mitigate, to reduce operating expense. So you've got, kind of one side of the house is really focused on, growth, revenue generation. The other side, the operations side, looking for ways to take costs out of the operations. So ultimately, you add all that up and it's like, are you profitable? Are you not profitable? And you also have written about profitability and about how people are not really looking at profitability the right way. The way I just explained it is a very, very simplistic, definition. What is your definition of profitability? What are some best practices that the SMBs need to know in order to make sure that they're looking at it the right way, that they're measuring it the right way?
Sure. Well, one of the reasons why I think that companies and people within companies measure profitability the wrong way is it's not just let's take a look at the P&L and what does gross profit and operating profit and net profit look like. Those are important metrics, don't get me wrong. But when you really take a look and lift up the hood on the car and take a look inside, you can really start to identify how healthy is this business, where are we really making money, and why. I sometimes speak to and I coach entrepreneurs who say, oh, well, I'm getting traction in my business, my revenue is going up, so that's a good thing, right? And I say, well, yeah, increasing revenue is good, but is it the right kind of revenue? Is the profit that you're making as a result of a move in the right direction for customer, product, timing, pricing, etc.? So when it comes to profit, if you have a group specifically within marketing that says, oh, we're doing a great job, well, you are doing a great job if you're actually getting a great return on the investment.
Right.
It's not just dollars, it's also percentage. It's not just dollars and percentage, it's also the amount of time that it's taking. So if you're putting a lot of energy and time and focus into a certain project, that's actually not that profitable. Whereas if you're able to leverage a small amount of investment, small number of people, limited amount of time, and get that same revenue, that return is phenomenal. So what I often say is companies that are saying, we're getting great profitability on this business is, well, take a look at this certain line of product, take a look at this certain geography. Are you as profitable in that product line or in that geography as you think you are, rather than just taking a look at it in the aggregate? So you may have at a gross profit line, 35% gross profit margin. It's 45% on one product category and it's 12% on another product category. And you say, well, across the board where we want to be. Well, why are you so low over here and why are you so high over there? Is it because of pricing? Is it because of cost profile? Is it because of the amount of marketing spend that's being allocated in different places? Is it because of the customer service that's being allocated on both lines? You have to really understand what that breakdown looks like.
Okay, so you really need to kind of drill down, maybe at the product category level. It's not just one size fits all. You need to look at each stream and do the analysis to determine what the total cost is, right? Because you even made a reference about people are not necessarily accounting for total cost.
Well, it's breaking it down into all different types of channels. So it could be product, it could be customer, it could be timing, it could be a geography, it could be facility, it could be initiative. There are a lot of different ways to segment the data down to say, once we get to this lower level of granularity, what is this telling us? If you go too high, it's not going to tell you the full story, albeit it's going to be quick and easy.
Right.
If you go deep, it is going to give you a much deeper story. It's going to take you some time, but there also might be a lot of noise. What companies need to do is ask themselves, what is the right balance and what are we seeking to get out of this analysis?
And what's your tolerance too? Right? And what are, what are the, kind of the pros and cons, and where do you want to allocate? Where is it? appropriate to allocate the right resources, right? To kind of get underneath that a little bit.
100%.
And so would that be something that, if you're on the marketing side, if you've got a product manager who's responsible for, a product category, I would say they would be the leader of trying to do that analysis, working with someone in an FP&A team. Would that make sense? To actually help them actually do that analysis and drill down to answer that question that you just
Right.
presented.
If you think about it, if a marketing person is tasked with saying, well, where are you spending the money? Where is the best amount of return? How is this translating to the rest of the business? That marketing person might say, well, I know where we're spending money. I know why we're doing this initiative, but the impact on other parts of the business, I don't know how to answer that question. The sales team, they might say, well, we know where our sales growth is coming from. We know how to price products, but what they might not know about is this one product category that they're doing extremely well in is full of defects. And the customer service department is having to spend tons of their time on that one product category. So even though the gross margin is high, even though the revenue is high, turns out the net margin or the contribution margin for that product is really, really low. So financial planning and analysis, or FP&A, is made up of those people or those functions that are saying, okay, let's analyze marketing, let's analyze sales, let's analyze costs, and understand the blend between what's happening in the function and how it influences finance. They are the strategists. They are the analytics people who can help weave together the story of what the numbers are telling them.
So this is a real partnership there, and here, and this is, I guess I would look at this as almost being an opportunity for the enterprise, the entire organization, to be grounded. Actually, this is a question. How important is it for the organization, all the functional leaders of the business, the head of marketing, head of sales, head of operations, head of IT, head of finance, as an example, to be operating from the same set of information, and so for effective decision-making, reasons, I think a lot of people have they're operating from different sets of data and making assumptions based upon those, their
Sure.
kind of with their lens.
Right.
What is a best practice for ensuring that people are working through, maybe there's a central repository of all these insights that come into play, and then how important is that to have like some standardization across the functional areas of the business to manage effectively?
That's vital. One of the key sayings that we hear in FP&A is a single source of truth.
There you go.
Right. So at a large corporation, there are often departments in, so shared services may be one of them, where all of the information that all of these different groups has access to is in this single source of truth. And to your point, Deb, is if every group is having access to different sets of information to try to weave together the same story, well, they're never going to get there if all their data is different. In small and mid-sized businesses, this can get challenging.
Yes.
Because the systems are separate and maybe not talking to each other to the level that they need to. And that's, this has been going on for a very long time, because a lot of these smaller businesses say, well, I'm not going to spend $500,000 on a system. I'm just not going to. They're on QuickBooks, or they're on Sage, or they're on Intact, or they're on NetSuite, or something like that, where they say, okay, this is where all the data is, but I need this data to serve my salespeople and my marketing people and my operations people, et cetera. And where we can get ourselves in trouble is, well, do we have the head of sales, head of marketing, head of operations adopt the financial mindset? Or do we have the financial people adopt a sales, marketing, operations mindset? And I can't answer that question depending on the culture of the organization, but it really goes both ways. You can't have salespeople just say, well, forget about the numbers, I'm a salesperson. They have to understand finance. But the finance people can't just say, well, I'm only in finance, I don't want to understand sales. They need to be in partnership together.
Interesting. It's very interesting to me in that, and when I do business planning, and so when I'm working with a client or a leadership team within my client organization, and I'll do like you do some workshops. You go in and facilitate meetings, have workshops. We spend, actually, I do a 2-day workshop. We spend the first half of the first day around the table, and all we're doing is looking at data. Why? Because we've got all the functional heads of the business around the table. So you've got your marketing, your CMO as an example, and they've got their lens on, what data sets are important to them, what they believe to be true, the assumptions that they're making based upon the data, and then you've got operations. And so we spend this time together grounding each other in our own reality, if you will, simply for that reason, to say, I've got my lens, but I really need to have a line of sight into, what I'm doing over here and the strategies I'm creating and the initiatives that I'm funding, the impact that it's got over here, over here, over here. And so what I find is doing an exercise like that, there are a lot of aha moments around the table at the leadership level where people, because they have their own biases, their own assumptions that they're making, and they're not necessarily accurate. So, that's just something I think, is a best practice also, is to say, pull all your data in, get all the people around the table, and try to find have a shared understanding. Then you can move into, okay, this is what the opportunities are. This is what the data is telling us, and then you're making recommendations for key objective strategies. You're building your plan after that, but that this is a key input into your ability to develop a plan that is cohesive and aligned across the organization.
Mm-hmm. Yeah, and I completely agree with that. And a lot of people say data doesn't lie, and depends on whether you've got good data or not, because it can lie.
Right.
But you can't really argue with data if it is correct. Where we have to be very cautious in the type of exercise that you go through is, how do we remove the emotional or political connection that people have to their own job responsibilities or their own departments. So if you have marketing that's taking a look at the data and the data says what it does, and they say, well, I disagree because what I'm doing is very important and I don't think that the sales team recognizes that this needs to be done. The reason why they're saying that is because there's some kind of an emotional investment in their work, and there should be. Everyone should have some kind of an emotional investment in what they do. But we also have to manage and subdue some of that heightened connection that people might have to their own responsibilities. And if they feel vulnerable or feel attacked, in those types of discussions where we say, okay, let's analyze what this data says and how does this align with our plan, but how do we also make sure that people are comfortable, that they don't feel that their jobs are on the line or that their budget is going to get cut, or that we feel that some of their people are less than adequate at doing their job. So we have to effectively be able to manage the objective with the intangible, because that's the way that all businesses work.
Right. Interesting. I think that there's a lot of value in going through an exercise like that so that you can collaborate and collectively come to an understanding of what those priorities, business priorities are. And by going through an exercise of everybody having an opportunity, a seat at the table, literally, to put forth their points of view based upon data, and then have everybody kind of get to that consensus, then that's an opportunity for them to get to that alignment that I spoke to, where you have shared objectives and everybody, the entire organization is working towards a common objective. So, and in small businesses that can be somewhat challenging, but I appreciate the comment about whatever data you have, it's got to come forward and be shared with the rest of the organization so people can understand your point of view, and then you can make the argument for why you're advocating for what you're advocating. So right. I appreciate that very much. And also in the SMB space, I'm going to shift a little bit and talk about access to resources, because you need a lot of help in order to do all this kind of work, right? In order to gather data, collect data, analyze data, come up with recommendations. In the SMB space, a lot of times these organizations don't have robust resources. They just don't have people on their team to help them do that. Quite different than in the corporate world, So what are some recommendations that you have for how small business owners can maybe leverage outside resources? Obviously there are people that are going to need FP&A support, financial support. There are business owners that are not, myself included, that not a financial expert. So, and what are some ways to work effectively with an outside resource where there's got to be a balance, and you may be getting counsel from an outside resource and you just don't know any better. What's a great way to make sure that the advice that you're getting is appropriate, so that you find that it's a good partnership?
Mm-hmm. Well, let me take just a slight step back and highlight that within a company, there are really 4 key pillars of what makes a successful financial organization. And that could be a Fortune 100, and that could be a startup. It revolves around technology, processes, people, and culture. If any one of those 4 is missing or is deficient, you're going to end up experiencing you're going to end up having a fracturing within the larger organization, but rooted within the FP&A or finance and accounting area as well. So if you're a small organization or a mid-sized organization, you say, okay, well, we want to be investing in all 4 of those different areas, but we're doing $5 million in revenue, or $1 million in revenue, or $50 million in revenue. So you're maybe constrained in terms of who you can hire, what you can invest in, how can you develop these processes, and then how do you make sure that what's going on in FP&A is actually translating to the other departments within the company and being a data-rich or data-driven organization. So a lot of these SMBs are in this really sticky area of, well, do I hire? I don't know how to hire. Right. Do I invest in the technology? Well, I don't know what the technology is. Do I build the processes? I'm not sure what they're supposed to look like. Do I develop the culture? Well, hopefully I'm the right leader and I have the right managers in place to be able to do that. So it's really difficult. What's important is to be able to establish whether it's a network of other business owners or other advisors or other, in a chamber of commerce, to be able to say, what don't I know?
Right.
Who do I need to talk to? Who can I ask these very vulnerable questions of to say, I've never done this before, I don't know where to go, who do I ask? And I don't want to just throw money at something and hope for the best. So it's really important to establish that network, connect with your chamber of commerce, get into some kind of a mastermind or peer group, but also identify who are your trusted advisors. For what I do, I don't go into companies for years and years at a time, because what my clients and my network often do is they say, hi, I have a question. I don't know who to go to. Carl, I know you either can give me the solution or you can point me to somebody else. Right. Who I can talk to. And that is part of my personal brand of, I'm not going to sell my services to a company that doesn't need them, but I'm going to point them into the direction of either an advisor or an implementation specialist or a counselor that they can say, this is where I am, Carl pointed me towards you, can you help me, or can you point me towards somebody else? In a lot of small, mid-sized organizations, they don't necessarily need full-time help.
Right.
A question often arises of, Carl, do I need to hire a CFO?
Right.
And I often give the answer, no, you don't. Because the CFO is going to be somebody who's very experienced, seasoned, expensive, right. And that company probably doesn't need that person full time. If they're a $5 million company, you need somebody who can run your finance function. You don't need somebody with 30 years of experience. So where I've established a business that I love, right. is saying, you know what, you probably need 5 hours of my time a month or 10 hours of my time a week. And you don't need it year round, you need it when you need it. And that's exactly how small, mid-sized companies can start to scale and position, is saying, well, I don't need to hire these people full time. I need a network and a reliable bench of people who I can go to.
So you need the subject matter expertise, and you can, and by doing that, by leveraging like a fractional resource, like a fractional CFO, you can, that's more cost effective, certainly. So you're getting the expertise you need when you need it, only when you need it, and then pull them in, later down the road.
Yeah. And a complaint that sometimes people have about fractional advisors, and it's completely founded, it makes sense, is that, well, it's very expensive on a per hour or per week basis. But if you were to take a full-time CFO, who you're paying a full-time salary, and divide it by the number of hours that they work, well, you're probably paying a whole lot more than you need to. A fractional CFO or a fractional FP&A advisor, while they may be a little bit more expensive on an hourly or a weekly basis, they're ultimately going to save you so much more money and ineffectiveness in the long run.
Got it. Wow, that's I love that. Thank you so much. I'm going to reach out to Ron for a second. And Ron, do we have any questions coming from our audience?
We have a couple of comments.
Okay.
Okay, so first one was Bazir, and we're going back to a little bit about the issue of collections, right? And the issue of having to go and make collections personally as opposed to use a financial intermediary, and you address that a little bit, right? Ways to service that, and he thanked you for sharing some of your perspectives on, get a little bit more. I had some other questions about automations. Is there any way to automate collection or no?
Well, similar to what I had mentioned in the one example with the gentleman I worked with out of Canada, is they had a direct connection to their customers' bank accounts. And they had a signed agreement that basically said on the first of the month, we're going to do a direct debit to the account and pull the cash in. So while a lot of companies might have a DSO of 30 days or agreed upon terms of 30 days, that DSO went down to 1 day because it was instantaneous on the first day of the month. Another way is to put together, there are lots of treasury applications and accounts receivable applications that will send reminders to clients and make it very easy, very automated, tied into your own data system, into your own accounts, so that you don't necessarily have to have an accounts receivable clerk spend an entire day every single month calling up customers and saying, we need you to pay, we need you to pay. So yes, there is automation, yes, there is software, and then there's also strategy in terms of saying, how can we get these payments from a longer cycle into a shorter one?
So, but that would be meaning someone like you to come in and kind of explain this and hold people's hand through the process, because I think that's what is needed, especially for small, medium businesses that actually don't have the opportunity to hire someone full time, right?
Yeah, what's often happening that I see in small companies is they have somebody in accounting who is going through the register every week or every month and saying, okay, who hasn't paid, and we've got to send an email, we've got to get on the phone. Like, there are literally people dedicated, their jobs are to get on the phone and call these people. And what I often see is, particularly at small companies, they say, look, I don't know what I don't know. I don't know what other companies are doing because I don't see what other companies are doing. And so I can go into these organizations and say, you can automate this, or, here's a great piece of software that you can use, and instead of your AR person spending 15 hours a month on the phone, we can get that down to an hour and a half. So ultimately, the software pays for itself very quickly. Mm-hmm. It allows the AR person to be focusing their work on more value-add activities, and the business says, well, now I know what I was missing out on. So again, a lot of the challenge that small and mid-sized companies have is just a lack of exposure to what are other companies doing? What are we doing that's inefficient that we could get rid of, or that we could ameliorate some of this pain?
And what are the tools? What are there are a lot of tools that are available, right? Software tools, and other tools that could certainly help facilitate this, right?
Right, absolutely. And
there are so many. It's almost like that's a topic for a whole nother show, right?
And there are a whole lot more coming out every single day.
Right.
But some of this can be, going to conferences and saying, let me go throughout let me go around the expo hall and let me meet different vendors, or let me go to my chamber of commerce and talk to people there, or to this networking group and talk to people there. So rather than go to a salesperson at a software company and say, sell me your product, you can say, well, let me talk to these other organizations that are dealing with or have dealt with the same issues I have.
Right.
What was their solution? What did you use? Who should I talk to? What was the cost? How long did it take you to implement it? Those data points are a whole lot better than going to a website and saying, this looks like a good solution, let me buy it, or let me talk to a salesperson whose commission is based upon them closing the sale.
So do your homework.
Do your homework.
Yeah, we have some other questions from Facebook users. So one was, what are some early signs of cash flow problems? How do you know that you're going to get into real trouble here?
So I think the first sign is your cash balances are not where they should be, right? So you'll start to notice that the cash that's hitting your accounts that is available to be spent on your recurring expenses that feels and looks tight. So you're starting to feel it, you're starting to see it in real time. But aside from that, one of the biggest obstacles that I see companies have is they're not forecasting their cash flow. In my background as a turnaround advisor and a distressed business consultant, one of our go-to tools that is really the gold standard in this space is a 13-week cash flow, 13 weeks being 1/4 of the year. If you don't have any kind of visibility in terms of what does your cash flow look like 4 weeks from now, 8 weeks from now, 13 weeks from now, it's going to be a huge surprise every time you get tight. I had a client overseas in Europe for probably about a year and a half or 2 years, and every month I would get an email saying, we're running low on cash, we're running low on cash. And it was because they didn't have the visibility in terms of what was coming in, what was going out every month. And I gave them my 13-week cash flow template. They took a couple of weeks to put this thing together, and the emails stopped coming in. Because the young woman who was running finance ultimately said, I know 13 weeks from now when I'm going to have an issue. If I know right now that a quarter from now it's going to start to get a little bit sticky, I can start to make changes today. I can reach out to those customers. I can hold back on expenses. I can pause certain capital expenditures that we planned on making, but we can't because we don't have the cash to be able to do it. So a lot of it comes from paying attention to what's going on real time, but having a near-term visibility in terms of what you're going to expect weeks and months from now.
That's right. So then that way you're more proactive. You're not just always reacting and trying to chase, right? So,
right.
Okay.
Yeah, we have a different kind of question here. So I recently hired an outside consultant, and while he's recommending many changes in FP&A processes, I'm struggling with making so many changes in a short period of time. So how do I know his recommendations are the best ones? How do you know when a consultant comes in and gives you so many different things to do, what's right?
It's a great question. What I often do when I go into companies is, I put together the classic quadrants of, what is a priority and what needs to get done. What is not a priority and what does not need to get done. And then what's a mix between the two. So when we see everything as being a priority and needing to get done now, well, then nothing seems to take precedent over something else. Everything seems to be critical. But that's not the truth. No matter whether you're a small company or whether you're a Fortune 50 company, there are certain initiatives and certain projects that should take precedent over something else. So you have to really be genuine in understanding what needs to get done right now, what's really going to move the needle, what's going to make the most amount of difference, perhaps in the shortest amount of time, and go in that direction. If you have a consultant or an outside advisor who's making all of these different recommendations, one, you've got to make sure that this is the right consultant, that they fit with the direction and vision of your company, and that you can trust them, and that they're not just trying to stay engaged with you. But the second that I almost always say is, your consultant or your advisor should be able to illustrate for you what the end game looks like. They shouldn't just be telling you what they want to do and why. They should be showing you what this looks like in your company, on a whiteboard, in a plan, in a process, and hopefully be able to bring an example of how they implemented that at another company. I almost never suggest hiring an advisor with no track record. They should have a track record doing what they're going to do for you, and ideally in the same sector, industry, or business size that you're in.
Wow, that's wonderful. Thank you. This is such a wonderful topic, and we have limited time, but please, I hope you'll come back and we'll do this again. Our audience will come back and tell us what they'd like to learn more about, and so I hope you'll come back and we'll do this again. Thank you so much for sharing, your wisdom with us, and there's a lot to learn here.
I appreciate it so much. Thanks a lot, Deb. Thanks for having me.
Have you here. And Rob?
Sure. You know what? Thank you so much for being here today, Carl, and thank you, folks, for joining us today. We hope you learned something new about, how, to financial planning and analysis for SMBs might work for you differently. Someone who can come in with, without breaking the bank and bringing actionable recommendations that you can use to transform the way in which you look at business and actually change the way you do business. Please share your comments with us and let us know what your key takeaways from today's shows really were and where you're watching us from. So Carl, before we sign off today, how can people find you, or how can they connect with you?
Sure, the best two places virtually would be at my website, which is seidmanfinancial.com. As Deb also mentioned, I am quite active on LinkedIn, so you are more than welcome to find me there, connect or follow me there, and I share nearly daily, sometimes multiple day insights on financial planning and analysis, the future of work, technology, and more.
Wonderful. So folks, I will make sure that both his website as well as his LinkedIn profile are in the description of this video. So you don't have to go looking for it, just look at the description and you should be able to find it. So we're currently planning our 2022 shows, and we have 2 panel discussions in the works for January and February. One panel with women business owners discussing best practices to build, scale, and grow your business, and another one with angel investors sharing what you need to know about raising capital for your business. Also, Ask Deb About Business shows next season will include discussions about the importance of user customer reviews, mobile first employee communication, the booming of remote and gig work, employee happiness, and that, and so much more. So our show's mission is to follow the small and mid-sized business trends and share knowledge with you from subject matter experts on those topics. So it's time for us to start saying our thank yous, and our biggest thank you is, of course, to the studio. So I'd like to share something a little bit about Butterfield Studios with you.
Welcome to Butterfield Studio, the highest quality virtual event production and live streaming broadcast platform in the industry. Owned and operated by an award-winning team of producers, programmers, and designers. Butterfield Studio is pioneering a highly secure, state-of-the-art virtual live platform that promotes and fosters the human connection, keeping the live in virtual events. Why choose Butterfield Studio? Butterfield Studio has the technology and the team. Everything needed to deliver A-class virtual events, all from one location. 7,500 square feet, multi-camera, turnkey facility. In-house production team. Brandable custom set. State-of-the-art lighting. Simulcast live broadcasting and streaming. Secure virtual platform, fast and interactive. Best-in-class audience engagement features with real-time analytics. And most importantly, Butterfield Studio has a roster of loyal customers who rely on us to produce professional virtual programming of all formats and sizes. At Butterfield Studio, we create, we deliver, we engage. Contact Butterfield Studio for your next production, and together, let's keep the live in virtual events.
Again, folks, thank you so very much for your being here with Deb, Carl, and me. Remember, if you're watching this show on Futures Television, listen to it in Radio Futures, or listening to it as a podcast or as a recorded event in one of the social media platforms, you too can be part of the conversation. Watch for the links on this video so you can continue the conversation on our YouTube channel, and also to find information about Carl's company and his LinkedIn profile. I hope to see you again soon, next year, in one of our next shows in another season of Ask Deb About Business. Thank you so very much, and see you next time.